Here to discuss the details is Constance Hunter. She is Chief Economist at Aladdin Capital Management. Constance, welcome back to Bloomberg. It's always good to have you on.
Thank you so much. Good to be here.
You just heard what Michael McKee was telling us, today's GDP number coming in actually below your estimates. What happened?
Well, we didn't estimate the residential investment to be falling as much as it was, and that was a mistake on our part because you really have seen housing fall off after the tax credit ended in April.
So is it mainly due to the tax credit ending? Is that what it was?
That's where our forecast differed from what the number actually was. But one of the things we did forecast well was the buildup in inventories. And last month when we had the surge, or last quarter when we had the surge in imports, we perceived that would be put into inventories this quarter, and it would add to GDP, and it did. The other thing is that personal consumption has been strong, and you've seen corporate investment very high as well.
And we're taking a look right now at the GDP Business Investment Index. What are we looking at? What are we seeing?
Okay, this is corporate investment in plant and equipment and computers. And so it's, as you can see, it's very V-shaped. Now, the rate of increase fell a bit this quarter, but it's still going up. And we expect with additional quantitative easing, it will likely go up in the next several quarters because companies are going to the corporate bond market, they're issuing debt, they're raising cash, and eventually they're going to put it to work.
Okay, now you mentioned quantitative easing. You put out a note today. It reads in part, quote, "This report suggests we are out of the double-dip woods. It also suggests that QE2 is in the cards next week." Does the Fed have a choice here?
I don't think they do. I mean, they've kind of put themselves in this camp, and
so
the market is very much
for people at home, because everybody, I always kid Tom Keene for playing inside baseball because everybody keeps saying QE2, quantitative easing 2. Basically, the Fed's going to print more money.
Well, let's take a step back. The first quantitative easing was really to get us out of the liquidity trap.
Yes.
It was buying assets to get us out of the liquidity trap. Now, I think their objective is to prevent the 10-year Treasury in specific, but the whole yield curve from moving higher. So their objective is going to be to keep yields where they are because, as you can see, inflation expectations are rising, even though the core PCE is still very soft at 0.8%.
And the Fed's balance sheet is rising as well, as we can see from that graph as well. That's a significant rise there on the 3-year chart.
Mm-hmm. And the issue, and something that Honig has been very vocal about, and he brings up some very good points, is that exiting is going to be a challenge. How do they get out of this when they want to start raising, or when they want to start exiting? They can't just go and sell the treasuries. Right? They're not going to be able to do that. And the maturities that they're talking about purchasing, they can't just let them run off because we're probably going to have inflation before then.
Okay, today, this year's Nobel Prize winner in economics, Professor Christopher Pisaridi, spoke to Bloomberg News in Rome today, and he had this to say about the U.S. economy going forward. Let's listen in.
There is a high risk that there might be a lost decade. It's worrying. It's as if we are seeing the U.S. becoming more like a European country, but then not having the active labor market policy and the social policy framework.
I was wondering if I could get your thoughts on what he had to say.
Yeah, he brings up a good point. One of the things is that we have a lot of jobs available, actually. The BLS does a report that comes out every Wednesday before the non-farm payrolls, and we have 5 million jobs available. They're not being filled because there's a skills mismatch between the jobs available and the jobs that people have. Now, we had this, you saw this in the 2001 recession, but it was mitigated by the extreme rise in home prices. People took mortgage equity withdrawals. They used that cash. They kept spending. So now we have to do retraining, and that is something that governments generally get involved with.
Could I ask you in about 20 seconds, are consumers hesitant about spending? Are they still skittish?
I think they're less skittish than they were, and if you look, actually, consumer spending is one of the components of GDP that's actually practically, well, it's 70%, but it's practically near the peak levels. Everything else is way below peak levels. So spending has come back to where it was before the recession. It's just not going to grow very strongly because there's every additional dollar that people are making, they're tending to save.
All right, Constance Hunter, Aladdin Capital Management, joining us on set. Always good to have you on. Thanks so much. Appreciate it.